Hi all and welcome to our weekly report. We have a busy week ahead of us which starts on Monday with Chinese manufacturing PMIs. Eurozone consumer price index data which could likely impact volatility across euro currency crosses, and also US retail sales and ISM manufacturing PMI data which could impact US dollar currency crosses. RBA interest rate decision, European employment rate and PPI figures are the main point of interest on Tuesday. Australian retail sales and trade balance figures, in addition to various European PMI data releases, are due on Wednesday. Thursday scheduled economic data releases appear to be fairly light. The week will finish on Friday with German industrial production figures and probably the most anticipated event for this week, which is US non-farm payroll, employment and average hourly earnings data, which could impact volatility across US dollar currency crosses and also US equity indices. Now, let's take a look at few markets. This is the intraday price for euro dollar based in 4-hourly time frame. The price action appears to be downtrending with the current price below 20 and also 50 period moving averages, and more importantly below this daily pivot and psychologically important 1.13 round number. Bears appear to be in control below that zone, 1.13, 1.1340, potentially targeting the current lows at 1.1230, possibly even 1.1160, 1.11, which is another nice and round number as a possible downside supports. Alternatively, only a rally from the current levels and a confirmed breakout and end of day close above 1.1340 would open up the way for a spike higher and a retest of this falling resistance trend line at 1.14, possibly only the breakout above that level and end of day close above 1.14, 1.1420 would negate the bearish scenario, potentially targeting further upside resistances towards 1.15, 1.1540. Sterling dollar appears to be downtrending in 4-hourly time frame, capped by 20 and 50 period moving averages, and also trading below this previously rising support trend line at 1.3150, 1.3170. Bears appear to be in control below that level, potentially targeting initial downside support at the current lows at 1.3030, 1.30, which is a nice and round number, and the cluster of these previous highs and lows here. Either a rally into resistance or the loss of the current lows and a gradual move lower could open up the way for the retest of this zone here at 1.2860, possibly even 1.2775. Alternatively, only a spike higher and a confirmed breakout above 1.3170 and end of day close above that level could open up the way for the move higher and retest of additional upside resistances towards 1.3340, which would be based on a cluster of these previous highs, possibly even 1.3480, 1.35 to the upside. Dollar yen appears to be under pressure as well. We have a loss of this rising support trend line, and even more importantly, we are currently trading below that psychologically important 111 level. This current spike lower and a bounce of the lows potentially indicates the beginning of something that could form a bear flag or a bearish rising wedge of some sort. But the key level to watch is at 111, 111.30. Bears appear to be in control below that level, so basically either a rally into that level and a loss of support and retest to the downside, or maybe a gradual move lower from the current levels and a loss of this orange line here, which is the pivot at 110.50, and end of day close below that level would open up the way for the retest of deeper downside moves towards 109.30, possibly even 108.50, 108 to the downside. Alternatively, either a pullback and a rally, or a rally from the current levels and a breakout above 111.30 would initially target 111.80 as a logical upside resistance. Only a breakout above that level and end of day close above that level would open up the way for the retest of 112.40, possibly even 113.50 on the upside. Aussie dollar appears to be downtrending as well. The current price action is capped by this falling resistance trend line, and the price action 4-hourly time frame is currently mixed with 20 and 50 period moving averages, and it's trading very close to this psychologically important, yet again psychologically important spot 71 area. Nice and round number. The current price action appears to be confirming the loss of this previous rising support, and it's retested now from underneath as a newly found resistance. So bears appear to be in control below that spot 71 level, potentially targeting downside supports towards spot 70.35, spot 70 area to the downside. Alternatively, a breakout above these current levels could potentially target this falling resistance trend line initially as a logical resistance around spot 71.50, spot 71 45 or thereabout. Only a breakout above that level and end of day close above this R1 level, which is spot 71.50, would open up the way for the spike higher. Then that would be kind of a breakout targeting spot 72, 72.13, possibly even spot 73, 73.25 on the upside. Gold also appears to be bearish. The gold is currently trading below this rising support trend line. The current price action found some support at 1290 level, which is very close to the cluster of these previous lows. Bears appear to be in control below that 1300, possibly even 1310 on the upside. So if the price rallies from the current levels, 1310 would be the logical resistance on the upside. Only a breakout and end of day close above 1310 would open up the way for the retest of 1322, 1332, possibly even 1346, which will be based on this high here. Alternatively, either a rally into this zone and a rejection, or a gradual loss of support at 1290 would appear bearish, potentially opening up the way for the retest of 1280 initially, which is the cluster of these lows here, possibly even 1270, 1265 to the downside. And finally, let's talk about crude oil. Crude oil is uptrending. The current price action is above that psychologically important 60 level, and it's above rising 20 and 50 period moving averages in intraday time frame, and it's trading above this pivotal level at 59.20. Bulls appear to be in control above that level, so either a pullback into that level and a rally, or a rally from the current highs could target initial resistance on the upside towards 61.30, possibly even 62.50, 63, 63.40 on the upside. Alternatively, only a loss of this pivot level at 59.20 could open up the way for a deeper retracement to the downside, and a retest of this rising support trend line, and also S1 in pivots, and then a cluster of these previous highs at 58. Only the end of day close, some sort of bearish reaction below 58 would negate this current bullish uptrend, and then open up the way for a deeper retracement towards 57, possibly even 56, 55 to the downside. Thank you for watching, thank you for listening, stay safe, happy trading, and talk to you soon. Bye for now.